Good morning. It's Wednesday, July 19th, just before 6 a.m. Central Time. Looking at the precious metals, they were flat up until about a few minutes ago. They started to crack down a little bit lower. So you got silver 25.22, down about 3 cents. You got gold down $2.70, 1978. You got copper down 430, trading at 378, and then platinum down 460 at 989. So they're all kind of breaking off a little bit. And I think what's really happening here is that you had a big number come out overnight. You had U.K CPI. What it did was it showed its first crack. It's starting to come down. So the interest rate expectations, remember the pound in the UK had been really this leader. They've been the one that's been the most aggressive on raising rates. Those interest rate expectations for them going farther out really starting to come off, where it was 50 basis point rate hike was cemented. Now it's 25, and it's about a 50-50 shot that they raise 25 or 50 basis points, but it looks like it could be another one and done type situation. Now, why is that important? If you look at the way the British pound and the euro currency, remember if the UK CPI is coming down, chances are the European CPI is going to come down. You've got the pound down about 111 points. We probably saw the peak in the pound, and then we'll start to see a peak in the euro, and we'll have a ripple effect on a lot of these different currencies. Remember, the euro currency makes up it's 57.6% of the dollar index, and then also the pound is 11.9% inverse correlation to the dollar index. So you get that pressure down on foreign currencies, you're going to get the dollar index up. So looking at the gold market with it at this critical level right at 1980, on the August contract, that's kind of this bull bear line where it might break out, threaten that 2000 level. What you want to do is you want to take off part of your position on the August contract, all right? Pick and prune your position. Take off part of it there, then look at new re-entries on the December contract, because I do believe that once the Fed pivots, we see that decline in GDP going out into 2024. You're going to see gold will get the next wave higher. Fed will go on an interest rate cut cycle, and then it's off to the races. So you definitely want to be positioned for that. But a great spot to get out of some of the August, some of the closer duration positions, and go out to farther. So we're going to be keeping an eye on a lot of different things here, a lot of different levels. We got platinum came close, threatened that $1,000 level. I thought it was going to do it yesterday, and it did. It got to about 1,003. You've got South African productions coming off. They've got power issues again. Some of those some of the mining stocks are reporting some problems over there, especially the platinum producers. So that's why I like the underlying asset versus the mining companies when it comes to this, because their profitability could be down if they can't produce enough. So keep an eye on the currencies, keep an eye on these key levels on the gold market. Look at the grains on fire again. So, and then on crude oil, not actionable at this point. We need it to come down about $3, $4, $5. And then natural gas, I'm going to start looking at that gearing out towards December. I think there's going to be a good long-term play there. Got any questions? Give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.